Good morning, traders. This is Brad Matheny. Today is the 25th of April. Happy Friday, everyone. We're looking at a pretty interesting move in the markets. Let's take a look at this SPY daily chart first and take a look at kind of where we're at. So, we've been moving into this consolidation range. I've been telling you how we're likely possibly going to move up into this level, running into this resistance around 550, 548, and potentially rolling hard down into this May low. Now, the May low could be up in this 490, 500 area, or could be a bit deeper. What's very interesting about this setup is how this flagging has played out. So, the way I would look at this right now on a daily chart is we've come down, we've set up an ultimate low. You can clearly see the ultimate low down here. We've moved back up into this type of a mode, setting up some sort of a pullback, which would indicate that we have the potential for a downward trend. So, in other words, we're looking at kind of a uh, inverted bearish phase in the market, which should potentially be flagging here. Now, what that would mean is we would expect either a invalidation, meaning a continued downward trend, if it were to invalidate and get below this low, and that would be the breakdown of the market, or we would be looking for a move potentially out and up into either a consolidation phase up over here, which I believe is ultimately coming. Okay, because I believe we're moving into this deeper kind of a move. I believe that we could see this happen out towards the end of the year, not right away. We also have this big broad setup up here with the excess phase peak pattern playing into this consolidation. So here we have the green. I'll mark this in blue so you can see it. This is the other excess phase peak pattern, the bigger, broader pattern, setting up down into consolidation into this area. And likely what would happen in this area is we would break downward out of consolidation into the ultimate low that I've been telling you is going to happen on over here. Get rid of some of these circles and understand. So we're kind of in a dual excess phase peak pattern. Which one takes precedent? Is it the one in blue that's breaking down into consolidation, or is it the one in this red that looks like we're potentially flagging? Well, at this point, the consolidation in blue, the line in blue, indicates what is most likely to happen, in my opinion, simply because it is the broader pattern. It's already confirmed into the consolidation phase. And this would be an invalidation of potential invalidation of that consolidation phase. So I'm watching for the blue cycle, excess phase peak cycle to really play out, indicating a potential breakdown. Now, again, I believe that this consolidation range could last considerably longer. So I'm going to get rid of this. And I'm going to explain to you that we could move into this flag back down here into this low, which seems very likely after this pullback. I thought that this was the flag here. Could be. We don't have any breakdown yet. So we'll see. It might be extending into this bigger flag, setting up the May low as the big flagging for this inverted pattern. And then what would happen is, like I said, we would typically stay within this range until we break out. So now what would happen in this breakout, you can see how we rallied up here, we came over, we flagged, and then we broke out very cleanly to the downside, right? Okay. But sometimes we get into this mode where we hit a peak and we stay in this flagging channel for a while before we get a big breakout. And that's what I'm suggesting is likely going to happen here. I'm suggesting that we are going to consolidate over the next 4 or 5 months, in my opinion, pretty much in this range. So maybe out here until September into that big yellow, I'll make it a bright blue range so you can see it. So see that big range? That to me is what to expect over the next 5, 6 months. I personally don't expect the markets to get out of this channel for the next 4 or 5 months, possibly out here until September, October, where we get the big breakdown. And I would be very surprised if we get out of this range over the next 4 or 5 months. It's a big range. It's going to give, it's what is it, a 15% range? 23, 24% range. It is a total of approximately 113 points on the SPY. So be aware that, in my opinion, we're trapped in this range over the next 4 or 5 months. We're going to see a lot of rotation, a lot of volatility, a couple of potential false breakouts up and down. And I think the traders need to be very aware that we are going into a very sideways consolidation phase. Now, we'll see how things play out. Personally, I'm watching this for a bigger breakdown here into the May low. So the May 2nd low back over here, that's what I'm playing. Now, given the end of the day where we're going to end up, I may choose to throw on a small hedge position. And the way I would probably do that is with either SDS or SSO. And that way, if I am concerned about where we closed here and don't know if we're going to get a last little pop over the weekend, what I could do is throw on a small hedge in case I get a pop. And if I don't get a pop, then I could remove that hedge on Monday or Tuesday or Wednesday as we potentially start to break down. So, okay, good, go away. Now that means that, hypothetically, the way that works is I might have, let's say, I have $2,000 loaded up in put positions, betting to the downside, and I don't want to see the risk potential to an upside move maybe early next week. So what I would do is I would take about 1/3 or 1/2 of that risk exposure and move it into a hedge. That means that I would protect myself against upside to be able to offset any risks that may happen to my downside, my put position. And that way, if something happens on Monday, big news, we go up into this area before we roll potentially downward, I am offsetting my losses somewhat. I can't potentially offset all of them, but I will offset my losses somewhat to the upside and still keep my longer put positions waiting for this rollover low. Because, like I said, I got into my put positions, up here near this high. So I am pretty close to that level on my puts, pretty darn high. And I'm fairly comfortable holding these puts for the breakdown, thinking that we're going to get a moderate roll from this area down into maybe this area on that May low. So no matter what, the puts I think will pay off. Just got to wait them out. Okay, so where we're at with the pattern today is an inside breakaway in trending mode. This is gold. Oops. We are looking at an inside breakaway in trending mode. We have just flipped into bullish. We have not changed on the bias indicators. Um, you know, and again, I'm going to just warn you that we are looking at this big, broad consolidation. So right now, the SPY is at 454.46 pre-market, down fairly flat. In order to get a breakaway here, it's going to either try to break upward or it's going to try to break downward. Logically, I think that the most highest probable outcome is to the downside. But again, depending on what happens today, I may try to hedge my position and I may try to work into a semi-balanced position over the weekend in preparation for this move, either a false top up here or what's called a bull trap, a breakaway of resistance, or a rollover move starting early next week that could be aggressive to the downside. Still believe that May low is going to be solid to the downside. So we're going to see how it plays out. QQQ, again, same setup. Right back up here to resistance. As I mentioned to you, we could get up into this resistance channel, which would be, again, a push into kind of a bull trap. Resistance, remember, is soft. It's not a hard line. It's like water. The May low suggests we're going to potentially come down into this 410, 420, 425 area. I think that this is really news driven. Yesterday, with the removal of some of the tariffs, and traders, like I said, we're going to be in this big range. So, same type of a setup here for the QQQ. When we get into this rotation, we are going to be pretty well trapped in this range all the way out until August, September, in my opinion. So understand that, very wide ranging. Take a look at it. 103 points, 104 points, and a 26, almost 27% range. So imagine we're going to wash around this range trying to establish some kind of a breakout, some kind of a trend. And then eventually, as I mentioned to you out over here, once we get past the October lows, I think we're going to start to move a little higher. So be aware that we're going to be rotating. So now gold and silver are down a bit. Gold is down 41 bucks and silver is down 24 cents, 25 cents. What does this mean? Well, it likely means moderate strength of the dollar, and it likely means a little bit of panic in the markets. So, my opinion is not too many people are going to want to hold over the weekend. As far as day traders, unless if they do, they're going to try to hedge, probably stay in options. I have no problem holding over the weekend and dealing with the markets because well, I've been doing this long enough. And like I said, if I have to, I'll throw on a couple of small hedge positions and call it good. Like I said, even if I have to liquidate a little to hedge, it doesn't matter. It's better to be protected into a weekend than overly exposed. And that's one of the first rules. Remember the rules of trading. Number one, protect capital. Number two, identify risks. Okay. Number three, you want to try to contain risk exposure. And then number four, identify opportunities. So sometimes you have to wait for them, but ideally, you want to protect capital at all times. You want to identify risk. You want to contain risk exposure if possible. And then lastly, you want to try to move into looking for opportunities. Most people have it backwards. Most people, look at opportunities first. They never really think of protecting their capital, and they never really think of containing risk exposure. The whole idea of trading is it's almost like winning a war. You take every inch calculated and you love it, and when you get those inches or feet or miles, whatever they are, you have to realize that now you're at a new capital level on your account, and you need to protect your account. So as you're making new trades, your focus should be on protecting capital and identifying risk exposure and risk containment before it should be trying to identify new opportunities. The opportunities will always be there, but if you screw up and you don't properly follow one, two, and three, you're going to find that chasing opportunities will destroy your account without the measure of protecting capital and identifying risk exposure. So gold and silver, again, I really do believe are in a big, massive rally, but the support level we're getting right here around 3,300 for gold, and down here around 33. We see this low down here at 33. I'll extend this out. These are very solid, in my opinion, support levels. 26, 28, 33, right there. And I think that gold and silver are really going to try to make a move off of these 3,300, $33 areas. So now that silver's above it, we'll see how it plays out today. Gold and silver are moving into an inside breakaway in trending, bullish, explosive. We could get a pretty big move up to the upside today. But again, it's going into Friday. We could see it move back to 33.60, 33.70 for gold. and stall back out. Same thing with silver, moving back up here to 35.40, 35.50 and stall out. That is not unrealistic given where we're at. Okay, now come back over here. Take a look at Bitcoin. Bitcoin has rallied up on out of this into our consolidation range. You see how we had this consolidation zone here and here. Pretty good breakout, obviously daily. I remember when we were talking about this on Monday, Tuesday, this big breakout range. And again, the flagging pattern here moving into consolidation and then the bigger flag. So you see, we have the little flag here into blue consolidation, then the bigger red flag here moving down into the bigger consolidation. We really have a consolidation channel pretty much holding from here to about here. Remember, it's got to be below the flag low, the consolidation level. If you get into a scenario where the consolidation range is up in the flag area, it's not really valid. So you see, we're getting a potential invalidation here, a potential spark of, let's call it a rally here. This could be an invalidation, but remember, the highs of the flagging were here up in this area. I'll mark this as a kind of a dark blue. And then we have another one with the secondary flagging coming up right here. So really, to get to invalidation, we would have to come all the way up to here. We would have to come from this level all the way up above these levels to invalidate. So again, that's providing a pretty big upward move to invalidate. Quite possibly, as we had this consolidation with this move down to a breakdown low in the little red pattern or the little blue pattern here, we could have run into consolidation low. I'm going to try to draw this for you here, get rid of some of these drawings, this ellipse, and some of these. Okay, so if we pay attention to this, leave that, leave that, leave that, get rid of this. If we pay attention to this and look at this consolidation range here, off this little blue pattern, having to get down into this range, breaking down here into this ultimate low, we could theoretically highlight the fact that we've come from this blue zone down to this ultimate low, up potentially into this, down potentially into extended flagging, and now we've now started to break up. We would have to get above this level, which we're trying to right now, to break to the upside. And this would then give us, this is a setup of an inverted excess phase peak. And that would then mean that we would rally up into consolidation before trying to break out to an ultimate high. So we do have that potential that this inverted excess phase peak pattern could really rally up into Bitcoin. But at this point, stalling near the flag high, in this case right here, 94, 95,000, in general, it could potentially invalidate. So we could be looking at a invalidation pattern back to the downside as well. Most logically, if we get below the flag or above the flag high here, we're coming right up into this area to consolidate. So it looks pretty good to the upside. In other words, I would suggest that we're looking at a potential break of the flag high in Bitcoin, potentially showing some life back to the upside. But we'll see how it plays out. Now, how would it work with this area here? This would be invalidation. So understand that this move in purple to the upside, getting above this high, would constitute an invalidation of this downward move, okay, from this consolidation range. This would basically be an invalidation move to the upside. So it confirms, again, price structure and price orientation. Okay, thanks for being patient. I had a very busy week with family, running around to doctors with my father and everybody else. I'm not saying that we're all doctor, whatever over here, but my brother had knee surgery. My dad's an older disabled vet. And, my wife and I, we still go see the doctor as we get older. Just a lot of running around. But we'll see how it plays out today, guys. Go get some, and thank you for all the great comments. Talk to you later.